Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Let's take a look again at the Forex markets, and today we will make the fast and brief update of the situation on the Japanese yen, because market is approaching to our culmination point that we have discussed in our weekly research. Well guys, concerning the euro currency, we will definitely take a look at it within the week, but right now it's not as interesting as the Japanese yen. That's why I think that as some pair carries more opportunity for trading, for short-term trading, especially when we prepare the daily updates, we should keep an eye on them and should dedicate some time to this particular pair. While euro currency is very interesting in the long-term period, but right now it has not, breaking setups for trading. That's why we probably will take a look at it within the week, but currently we will speak about Japanese yen. I just would like to briefly say concerning the euro currency that I suspect that now euro currency stands on the road to the 144 area, because the price action that we see now on the euro currency means that market really has bullish potential, and we will definitely I will explain my position on the weekly research that probably we will dedicate to euro currency on the nearest weekend. This mostly is based on the situation on the monthly time frame chart, and we could really euro currency could really be on the road to the 144 area. But right now let's take a look at the Japanese yen. So in our weekly research we said that in the short-term perspective market could show some bounce to the downside, although some higher time frames on the monthly time frame and the weekly time frame we have suggested some a bit high move somewhere to an area 10.50 somewhere to this area, 105, 106 on the Japanese yen. But right now, on the short-term perspective, we could get the double repo pattern right at the significant resistance. So that is the completion point of the ABCD patterns 100% extension. So 103 and a half area. Also, that is the extensions of this butterfly, smaller butterfly. This is also the 127 of this larger butterfly of this one. Okay. So that will be not bad resistance cluster. And take a look, market could form here the double repo sell pattern once it will touch this area. That is what particularly we will monitor within the current trading session. Right now you see that market already has slightly exceeded this top. That is what we have suggested, and that's very good for the double repo pattern, if of course it will be formed, because when the market will pass through this top, some new traders, some breakout traders will open long positions, and if this resistance will appear to be strong enough to hold this upward momentum, in this case those who will enter here on the long side of the market will be trapped by the resistance, and when market will start to move down, will capitulate from the further upward action. They will be trapped and they will scream let me out, and stops will be triggering and market will accelerate to the downside on these stops. So the target of this double repo pattern will be approximately around 100, even 100.5. So that's also coincides with this previous swing top. You see, so that will be probably the target of the double repo pattern, and that an area will be where we will start to think and start to monitor for potential buy opportunities on the Japanese yen. But right now we should be focused on this potential double repo sell pattern on the daily time frame chart. On the hourly time frame chart, we said that we need to see some reversal pattern that will trigger the target of the ABCD pattern on the daily time frame, and simultaneously will point on the potential reversal here. So here you could see that could be the butterfly sell pattern. One moment, I just add exponential MACD indicator here. Well, you can see the divergence starting to form. On the hourly time frame chart, market is forming the double repo sell. Now you can see it has hit the 127 extension, has shown shy retracement down. Now market is continuing to the upside to the 1618 retracement. In fact, the 1618 target stands slightly lower than the target of the ABCD. But if market will form some spike up, something of that sort, here, then it will could simultaneously touch the target of the ABCD that stands around 103.5 area on the daily time frame chart. Anyway, now we stand near the culmination point of the potential starting move by the double repo pattern, and we should be watch for taking the short position in this area. If we will draw the MACD predictor, we will see that market is forming here multiple stop grabbers, but they are too short term. These stop grabbers do not suggest the taking out of these lows. In fact, these stop grabbers already have been worked out by taking of these lows. So, but in general, that is the sign of this housing on the market right now. So let's see what will happen in the nearest future. Well, to possess ourselves on the short side of the market, there are two possible moments. So the first moment that carries greater risks is trading and entering short by the butterfly pattern. So if you would like to take the position by the butterfly, you should place the stop somewhere above the target of the ABCD pattern, maybe somewhere around 103.65 area, 103.70, because the stop should be above this target. If market will pass through this target and continue to move up, then we will understand that we were wrong and that our setup hasn't worked, and market really continue to move to the upside. That will be our invalidation point. But if we will right, in this case we will get the position right at top of the potential double repo pattern. But this entry holds more risk, because we do not have the confirmed double repo pattern right now, and that still could fail, could shift to the double repo failure, or market just could continue to move higher. We do not know. That's why this possibility holds more risks entering short. The second possibility is to trade purely the double repo pattern on the daily time frame chart. So for that purpose, we need the market will return right back down and close below this green line, that is 3x3 moving average. When we'll see this, that will be the confirmation bar of the double repo, and that in this case we will get the not as attractive entry point. It will be worse than here, but we will get more confidence on our side, because we will get the confirmed double repo sell pattern on our back. In this case, that will be just safer possibility for entering. So decide what choice you will make. So maybe you could combine both of them, just taking the small part of the position here and add more if market will really continue to the downside. Well, that's a lot of different variants and possibilities here with dealing with this pattern. But currently market is approaching to our major point, and that's really interesting situation right now. As you can see, the spikes are forming. So let's see what will happen. So we're near right at the target right now, right at an object. So that's really interesting moment. So that's all what I would like to say about the Japanese yen currently. Let's see what will happen in the nearest hours here, and let's see whether our double repo pattern will work, or market will just pass through this area and continue to move higher to the upside.